Welcome to Bears in Exile. Today is Monday, November the 5th, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, SLV, maybe, and some others. Alright. So today started off massively horrible with the everything plunging. It looked absolutely terrible, and by the end it was able to pull out a save, which was impressive. Starting off with the Dow, we were saying in last night's video, actually Friday's video, the last video, that the bulls were not finished yet, although they had taken a little bit of a wallop, and yeah, that carried through to today. And kind of amazing that it has as much action as it does, considering that tomorrow is the election. And so I don't know what's going to happen tomorrow based on that, but can look at the charts and see what it says. And what do we have here? We have a hammer, and it is, well, it's not at the bottom of a range, it's at the bottom area that we've been having for a while now. Could you call it the bottom of the range? I suppose maybe you could, simply because it's sharing the lows, but beyond that, I'm not so enthusiastic about that. What else do we have? We still have the MACD histogram sloping on up. We have everything else pretty darn mixed. CCI down, stochastics mixed, trying to go up. 14-day RSI moving average going down, RSI going sideways, MACD going down. Very, very mixed bag, starting to build a new bottoming area in the heat map. Interesting. Would have been better if we had a higher low. I suppose it's just a hair higher, but really, I would just count that as all just bottoming area. We know about the channel. Of course, we're far away from the channel once again. It'd be nice to break back inside of it and hold, but we just don't have anything saying that at this moment. The daily is shaky, so bullish, bearish, could make a case for either one. Not too much help. Going on to the 60-minute time frame. Yeah, we can see the opening parts of today is very ugly. Certainly it looked like it was in big danger of breaking down, and then all of a sudden here it came and was saved. Yeah, up 19 points, really not reclaiming much of any in comparison to Friday's nastiness. But what do we have here beyond that? Well, we have the histogram moving up with MACD moving up, we have the RSI moving up, CCI moving up, stochastics moving up, and the 14-day RSI moving average is going down. So at first glance here, although we have a bottoming area which is trying to get worked out, this looks like a secondary reset where everything will go up and then turn down to meet the 14-day RSI moving average towards the way down. So short term, yeah, it looks more positive than negative, but mid, longer term, at some point it's going to move in conjunction with this. The only saving grace would be is if everything got to the top and then prices stalled as the 14-day finished out its move to the downside, but it's less likely that that'll happen. So anyways, short term, not bad. Medium, longer term, yeah, it doesn't look good. Moving on to SPX. Now this one is different. This one is much better, or at least a little bit better. We have the channel. Went up and tested it today, backed away from it. It's a higher low than we've been having, unlike the Dow. We have great alignment with stochastics pointing up, RSI pointing up, MACD going sideways. I'm sorry, the 14-day RSI moving average going sideways. The MACD histogram still sloping up. Yeah, the MACD still pointing down, the CCI still going down, but this is a much better alignment, much better arrangement, much better positioning than the Dow. So it does give me a little bit of hope that yeah, we can get up to the upside. We have been looking for the bounce. Thought it came on Thursday, and we're waiting to see if it could hold, which it didn't. Maybe now it'll try again. But not holding my breath, but yeah, this looks a lot better than the Dow. Excuse me. Going on to the VIX. Oh boy. Gapping above the 200-day moving average, totally laying to waste our happiness when it broke the 200-day moving average to the downside in force. So back above it once again, ending with a spinning top indecision, and being a lower high if it were to turn at this moment. So that is nice. Little last gasp before going down in a definitive fashion, but that's just a guess. It has worked off the bottoming area from Thursday and Friday. No problem there. We have everything moving up, even the MACD histogram. So, warning sign. Even though it looks pretty questionable, we have great alignment. So, not exactly what the bulls would like to see at this moment, but it is what it is. Not bad at all in the daily. Going on to TNA. Yeah. Now this one, very, very cool. We had the bearish engulfing on Friday. We noted it went down to the 200-day moving average. Said that that would be a really good place for it to get caught. Lined up with all these other candles, their bottoms. And today, it did pierce. It did look grim to begin with. And then it bounced right off of it. Clean bounce off the 200-day moving average. But notice it did not clear the midpoint or pierce the midpoint of the big red candle. So that is a warning sign. Nothing in the heat map. And MACD histogram still going up. Still going up. MACD going sideways. RSI going up. 14-day RSI moving average going up. And stochastics mix down on the CCI. Overall, daily on TNA does not look bad. It does have some things to prove, but it does not look bad. And we also noted on Friday the problem of being too close to the top of the channel, and that this was a solution to that problem if we were going to go up. And yeah, this is behaving much better than the Dow, much better than SPX, and if this is leading at the moment, which it should, this is a good sign. Going on to UUP, the problem child. Yes, problem child. I don't know why this is messed up again. So, we had the line in the sand, gapped above everything. We said that that was a problem. It is not a good thing. And today, gapping up once again and pushing up the upper Bollinger Band, which we said was possible on Friday's video, but not as likely as some other move. Well, it decided to do what was not likely, and we have a doji star at the top of a possible range, which is a good sign for a potential reversal. It's into this gap over here. Do we have anything else? Well, we have more topping area forming. It isn't nasty green, but it is forming. Everything is going up, and with the exception of massively extended and a bad candle and not conquering the long-term moving average bar correctly, we don't have anything obvious here saying that there's a nasty problem, but there should be. What else is there? Oh, and considering it was such a big gap, the market's closing green. It's actually a pretty darn good sign, with the dollar being so darn strong, the euro being so darn weak, that the market was still able to be green. So at some point, this is going to turn and go down, and presumably the market will leap when that happens. But I guess the election tomorrow will have some bearing on that. So we'll see where it stops and where it turns, but nothing really to go on at this moment besides a gut feeling, which just isn't good enough. Going on to USO oil. See, now this sucker makes sense. When oil is bullish, the market is bullish. Oil was bullish today, mildly, stopping at the halfway mark of the big red candle. We have no uptick yet. We have a bottoming area still in the heat map. We have the MACD histogram going up slowly, up on the RSI, up on the CCI, down on the stochastics, down on the 14-day RSI moving average, and down on the MACD. Not a terrible showing, but definitely not as strong as we would like to see, or have as many indications that we should have more strength. But yeah, bottoming area. We'll see when it gets a nice turn. Hopefully that would be tomorrow, but tomorrow's the election, so it won't count on anything. Moving on to FXE, the euro. Look at this weakness. Holy cow. Breaking the 200-day moving average on Friday. Getting below the long-term moving average bar. And gapping down once again. Totally outside the lower Bollinger Band. Not a good sign for continued movement to the downside. What else is there to say beyond this? Bottoming area in the heat map. Everything is clicking down, with the exception of the 14-day RSI moving average going sideways. At first glance, it sure does look weak, but also really darn extended. The long-term moving average bar should suck it back into itself. It just is not doing so yet. And GLD, not impressive. Inside bar. Bottoming area in the heat map. Most things clicking down still, with the exception of the CCI, RSI. Just not a good indication one way or the other. What is there to say? I just don't like gold. Haven't liked gold for a while. I would be surprised if something interesting happens soon, but I really just don't see too much indication of that yet. And comp Q, the NASDAQ. Bouncing off the 200-day moving average. Very nice. Piercing it, but still bouncing off. Very nice. Not breaking the halfway point of the big red candle. Almost challenging it, but not quite, with the shadow. We noted the two possible ascending trend lines from back here. And it also bounced off of one of those. Excellent. Beyond that, MACD histogram sloping up, MACD up, RSI up, CCI sideways, stochastics up, 14-day RSI moving average sideways. This does not look bad at all in the short term. It does not look bad. The question is, what can it do to the upside? Well, we've got to break the halfway point. We've got to break the top. And then we've got plenty of other things. We've got to top with this big red candle with a major price consensus level for the current month, new month. So let's just say it gets up to that point. It seems like that would be natural. That would be at 30.66. Not bad. And the driver of the NASDAQ and the market as a whole, Apple, had a nice bid on it in the pre-market. It maintained a good chunk of it, not all of it. We don't have an uptick. We're still below the 200-day moving average. Going back up to kiss it would be totally natural. That would give us an uptick. Uptick would take us to around about 607, 608 at this point, if it happened tomorrow. No idea if it will happen tomorrow. But, I do think that taking over the 600 mark is massively important, and we'll see what happens at that point. Uptick on the MACD histogram, down on the MACD, up on the RSI, up on the CCI, and sideways low on the stochastics and the 14-day RSI moving average. Still a bottoming area in the heat map, which has been holding for a while. Just so negative. So negative. Would love to see it turn and rip higher, but we shall see. Going on to GE, trying to get a better read on the Dow. We said on the last video that it was not so bad. Not so bad. Today, getting right to and closing at the halfway mark of Friday's red candle. Not bad. We still have the uptick to be met at 21.8. And we have... Is that right? Yeah, that's right. And we have 2 more days to fulfill that target. If we have a big rally after the election, that would be more than enough time to accomplish. Beyond that, 14-day RSI moving average going down, CCI sideways, RSI up, stochastics up, MACD up, MACD up, MACD histogram up. Daily on GE doesn't look bad. Doesn't look bad. And JP Morgan, the most important bank, it was a lot like GE, not too bad on Friday, all things considered. Today, gapping down just slightly, ending with a hanging man, not at the top of a range, not at the bottom of a range, and not telling us that much. Working itself off in the heat map from a topping area. And actually, this looks pretty darn shaky. CCI going down, stochastics looking like they sort of want to turn, 14-day RSI moving average up, RSI up, MACD histogram up, MACD down. Shaky. Shaky, shaky. And XLF to finish off the night. Very similar to JP Morgan, except it's a green hanging man, not at the top of the range, not at the bottom of the range, and just as shaky in all of the other secondaries. Not much to be gleaned at this moment. So there it is. Tomorrow, very important day. And Wednesday is the Euro vote for Greece. If it does pass, more austerity is on its way, and the Euro should strengthen. So we could have a really nice movement going into Wednesday after the vote, whenever that happens, in addition to whether or not the market likes who's elected president tomorrow night, assuming they crown a winner tomorrow night. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.